Hi, everyone. My name is Will Osborne. I'm an account executive with Madison Trust.
Ryan Connelly, also an account executive with Madison Trust. Pleasure to talk to everybody today.
Yeah. And so we're talking about the Checkbook IRA today, specifically for real estate. So let's get right into it. So a natural place to start, I'd say, is talking about the difference between a standard self-directed IRA and a checkbook IRA. So with a self-directed IRA in general, and with a checkbook IRA, you can invest in alternative assets, and real estate falls under that designation. But in addition, you can invest in private companies, private loans, startups, et cetera. Really anything that's not publicly traded, that's what we specialize in. And with the standard self-directed IRA, the account holder directs Madison Trust or the custodian to perform transactions on their behalf. So, for example, when someone wants to place an investment, they, of course, let us know. They also send us investment documents for review. If it's real estate, we're looking at the documents related to the purchase, purchase contract, settlement statement, deed, all that good stuff is coming to us for a quick review. We, as the custodian, sign documents where applicable because, it's the IRA making the investment, not the account holder. And then we send the funds off where the client tells us on a investment direction form. With a checkbook IRA, transactions do not need to be performed by the custodian. The account holder takes care of them on their own through an entity that's held under the LLC. And Ryan will talk about the entity choices in a bit here. But yeah, so with the checkbook IRA, since transactions aren't taking place through the custodian directly, you are going to be saving time because you're not dealing with us and the processing times. No reviews for investments, and all expenses for real estate, they're just paid right out of the entity that you set up. With a standard self-directed IRA, expenses need to be paid, of course, still through the IRA, but you'd fill out forms, let us know where the funds are going. There's transaction fees and processing times there. So that's the real benefit of the checkbook account, the fact that you skip that sort of red tape. But yeah, Ryan, why don't you dive right into the two options for the checkbook control?
Absolutely. Yeah. So we have our IRA LLC and also our IRA trust. So in both cases, you do get checkbook control. You get that real-time access to your funds, when making investments, as well as, paying maintenance, or expenses on the property. So in both cases, you do have that checkbook control. But there's just a few minor differences between the two entities in this case. One being a slight price difference for the setup, $100 difference there. In addition, the LLC is a state entity where the trust is not. So, an LLC, there are state filing fees dependent on the state, and the trust is generally a quicker setup time, for that reason exactly. So
right. Exactly. Yeah. And just to give you an idea of how this works logistically, let's say you decide to set up an IRA LLC. So the LLC operating agreement has provisions that allow you to manage your own IRA funds. So, references to the Internal Revenue Code are in there pertaining to IRAs. That's Section 408 and Section 4975, which covers prohibited transactions, which we'll talk about later in the webinar. So we've got that operating agreement, which makes it an IRA LLC as opposed to a standard or boilerplate LLC. And the owner of this LLC isn't the account holder directly. It's literally their Madison Trust IRA. So the IRA is purchasing 100% of the ownership units of this LLC. So now it's an asset under the account. The account holder is the non-compensated manager. So even though they're not an owner necessarily, they're still overseeing everything that's done under the LLC. So once all that's set up, the account holder will set up a checking account for the LLC that's done at the bank of their choice, or we can refer them to our preferred bank. But anyway, once that's established, the account holder lets us know. We send the funds from the Madison IRA to the LLC checking account. From there, the client takes over. So when you want to purchase real estate, you would cut a check or send a wire directly from that LLC checking account to the escrow company or to the seller, however the transaction happens there. And when expenses come up, same thing. A client takes care of it on their own. They're just paying it right out of the LLC checking account. No need to get Madison Trust involved. And any income like rental income, that's going right back in to the checking account. And since the LLC is under the IRA, it's technically an investment under the IRA. So when we move the funds from the IRA to the LLC, not a taxable event. It's, again, technically an investment. So that's why the tax advantage still stands. It's a pre-tax IRA, traditional or Roth, those tax advantages still stand. Adding this extra layer via the LLC or the trust, that's what gives you the control. And everything I said about the LLC applies to the trust as well. The checking account, the entire process, as Ryan mentioned, the main difference, you don't have that added liability protection with the trust that most people appreciate for real estate.
Absolutely. Let's also jump into different types of real estate you can invest in within this checkbook IRA structure. So honestly, it really is unlimited. So figure rental properties, raw land, tax liens, tax deeds, condos, etc. Even mobile homes, a possibility. Going to add to that a little bit.
Yeah, sure. I mean, any investment that needs real-time funding, a checkbook IRA is going to be required. Whether it's the LLC or the trust, it doesn't matter. Real-time funding just is not possible with a standard self-directed IRA. I mean, our standard processing time is 4 business days, which is still pretty quick compared to, the industry. But for some investments, that just isn't going to
make sense.
So that's buying real estate at auctions, tax liens, tax deeds. This is a requirement, basically, if you want to use IRA funds. And yeah, you're right. I mean, any type of real estate's fine. Really, you just got to worry about who you're transacting with, because that's where you can get into trouble. So again, no limits. You went over all of them. You can do pretty much any type of real estate. But again, it just matters who the IRA or LLC or trust is transacting with. So let's just dive into disqualified individuals.
Yeah.
So do you want to quickly go over those?
Definitely. Yeah. So disqualified individuals to your IRA include you personally, potentially a spouse, and think of lineal descendants. So parents, children, grandparents, grandchildren, etc. are off limits to your IRA. So, for example, you're buying a property through your IRA, in this IRA LLC structure, you can rent it out to potentially your son or daughter, or, potentially buy a property from your son or daughter, or vice versa. So anything along those lines, anything closely held in that regard, you can't transact, with your IRA.
Yeah. So, and when you say that, I know you mean IRA, LLC, or trust. So all the same rules that we're talking about here, they apply to the LLC as well. So it's not like, oh, I'm investing with an LLC. Now I can, buy property that I own personally. Doesn't matter. All the same rules are going to apply under the LLC or the trust.
Exactly.
So yeah, and on top of that, the disqualified individuals, lineal ascendants and descendants and spouses, they cannot benefit from the property. So staying in a property held under the IRA or checkbook IRA, that is going to be off limits. Even staying overnight is not allowed for the disqualified individuals. Another thing, sweat equity, so physical labor done on the property, can't be done by the disqualified individuals either. The IRS views that as an improper contribution to the IRA, and also just a transaction in general, even though there's no cash going between the LLC and anyone else. So yeah, keep that in mind. You do have to hire plumbers, electricians, contractors, etc. if things need to be done on the property. And when you're paying them, it's again coming right out of the LLC or trust checking account.
And as a segue there, also when titling assets, whether it's a property or any other asset in your LLC or trust, you're just putting it in the name of that entity. So hypothetically, you have such and such LLC. That would be the title on the property, basically.
Yeah, ABC LLC. Yeah, that's what's going to be on title on the purchase contract on everything related to the investment. It's going to be whatever the LLC name is listed. And I know some of you might be clients of Madison Trust already, or maybe even Broad Financial, and you might be used to the Madison Trust titling, Madison Trust Company, custodian, FBO, your name and your account number. That titling really doesn't apply for clients with the LLC or trust. So again, it would just be the entity that's making the investment that's held under the IRA. So I know it can be a bit confusing, but yeah, just a difference there in terms of naming conventions. And by the way, just in case we didn't explicitly say this earlier, when we say IRA, LLC, or IRA trust, that's synonymous with checkbook IRA, because these entities are what give you the ability to manage your own IRA funds. In other words, checkbook control. So just want to make that very clear here. So let's see, we have a list here of stuff we wanted to cover. So we've covered the differences between the two types of accounts, Covered the LLC and trust. Yeah, I mean, the benefits, we've, been going over it sporadically throughout, but on top of diversification, you have the enhanced control because again, you're not having investments reviewed by Madison Trust. You're not going through that process. You're saving money, no transaction fees to worry about. Any type of real estate's possible with the IRA or even the checkbook IRA. No retitling. Income and expenses flowing through the LLC or trust that's established. And as a rule of thumb, any IRS reportable transactions need to flow through Madison Trust. So I'm sure you talk to people about this all the time.
Absolutely.
But if you want to take a distribution from your IRA and all of your funds are under, like let's say your IRA LLC, all you do, send the amount that you want distributed back to your Madison IRA, fill out a quick distribution form with us, we'll send you the funds. So it's still simple. It's just that added step is needed so we can make sure
the custodian's still necessary in this case.
Custodian's still necessary. Exactly. Yeah.
And in fact, your IRA is the owner of the LLC. So, hence why you'd have to send the funds back and then eventually distribute those accordingly with the custodian to keep within the IRS guidelines, of course.
Every IRA needs a custodian. And even though you're investing through, the LLC or the trust, our services are still required.
Exactly.
And then, why don't we dive into non-recourse loans? Do you want to
absolutely
start off there?
Yeah. So in general, the real estate, there's mortgages, potential loans. Through an IRA, it's structured just a little differently. So you still can secure financing, but it does have to be done through a non-recourse loan. And just for reference, a non-recourse loan, basically the only recourse, in case the loan defaults would be the property in this case. So can't go after your IRA, can't go after you personally. But in doing this, generally not as popular as a standard loan just because, less people do it, less banks do it. But yeah, I don't know if you want to hop into UDFI potentially.
And just to add to that a bit. So it's a non-recourse loan. So only recourse is going to be the property in the event of default. And on top of that, you can't personally guarantee the loan or use your credit score to secure the loan. So it's a riskier loan for the bank. There's no doubt about it. So the terms are not as favorable as a conventional mortgage. Underwriting process is simpler, however, because they're just looking at the property that you want to purchase. Exactly. They just want to make sure
the property, and then generally they're looking for projections over the next couple of years to ensure that you're making some sort of income off the property to eventually pay back that loan. Funds.
Rent rolls or projections if needed, that would suffice. And we have a preferred lender that we can refer anyone to. If you want to reach out to us, we'll send our contact information later on in the webinar so you can reach out about that type of stuff. So you had talked about UDFI briefly. So there can be tax implications if you get a non-recourse loan through the IRA. And when I say IRA, I also mean the LLC or the trust. Because if you're investing through, like, let's say the LLC, which by the way tends to be more popular, especially for real estate, but if you're investing in real estate through the LLC is getting the loan, not the IRA. Just want to make that clear. So the tax implications. So the tax I'm referring to is called UBIT. That stands for Unrelated Business Income Tax. And UBIT applies to another acronym, UDFI. So UDFI stands for Unrelated Debt Financed Income. So basically, the IRS sees the funds that were lent to your IRA as unrelated to the account because those aren't funds that you contributed to the IRA. And so now the IRA, or in this case, the LLC, is making money from money that was lent to the LLC. That is an IRA fund. So, of course, IRS wants to tax the net profits attributable to debt financing. And it's net profit. So you can, take advantage of deductions like depreciation when calculating UBIT. So at the end of the day, it could be a wash.
Exactly.
There might not be any tax. It could be minimal. Obviously, we can't make any guarantees. It just depends on your particular circumstance or scenario. But you would just work with your accountants to determine the UBIT bill or if it even applies. Because if UBIT is $1,000 or less, you don't even need to report it. So brief overview of UBIT and UDFI. I'm trying to think if I'm missing anything else. Can you think of anything else there? I think I covered it.
Yeah, I think you covered it all there.
Okay,
Yeah.
fantastic. So yeah, let's see. We talked about prohibited transactions. That's, I'd say, the most important.
Absolutely.
Yeah, yeah. I mean, even if you're using the LLC, don't stay on the property. Don't
Yeah.
do any of the work yourself. Just follow those rules. I know
You're
they
good to
might
go.
seem, a little odd, but yeah, that's just it's what we're working with here.
Yeah.
Um, and so yeah, we've covered mostly everything that we've wanted to cover, and I'm looking forward to hearing some of your questions. But quickly, just how to get started with us. It's basically 4 steps. So you'll open the Madison Trust IRA. That's always a requirement.
Exactly.
From there, you would create the entity that you want to set up. Back to what Ryan was saying earlier, you're either setting up the IRA LLC or IRA Trust. Either option gives you checkbook control. And our sister company, Broad Financial, who both of us work for, by the way, they set up the entity, whether it's the LLC or the trust. So if you end up talking to either me or Ryan about this, we can help on both sides here with the IRA and the LLC or trust setup. So now at this point, we've got the IRA set up, we've got the entity set up. What you'll now do is turn your attention to funding the IRA. So, if it's an IRA transfer, we'll help you out with that. Same with a 401k rollover. But once the entity is set up, Broad Financial sends clients instructions for setting up the bank account. You'll get a referral to our bank that I mentioned before. And then you just fill out a direction letter with Madison telling us how to get the funds to your checking account. That completes the process. You take over from there. That's when the checkbook control
Exactly.
kicks in. Anything else you want to add to the process there? Not sure
No.
if
I think you got it all.
Okay.
And once in the LLC, you're pretty much taking care of the rest in regard to the purchase of the property, and ongoing. We alluded to that before as well.
Yeah.
So
exactly. I think we've covered it all.
today.
I really hope that was clear. But again, as Alberto said, if you guys have any more questions, need to set up the account, or just anything really, just contact us.
Yeah,
happy to help out.
That's anytime.
Exactly. Yeah. And thank you so much for joining today. We really appreciate it.